2023 has been an amazing year for most retail investors as they tend to be longs the mega cap stocks like Google, which is up 60% year to date. Meta is up 193%. Amazon is up 82%. And this is where you tend to get a lot of people flexing their year to date returns. I personally don't do that because I believe 2023 has been an easy year for most people. I mean, everyone that bought anything of the Magnificent Seven at any point in time, you most have likely made money, especially if you bought Nvidia at any time, even at the top a few months ago. You still somewhat made money on Nvidia. But I will be talking about my year-to-date returns, some of my best and worst performing stocks in 2023. I'm going to do that next week, just like I did in 2022 when I talked about my trades and everything I did. But for this video, I'm looking forward to 2024 to try to determine what kind of stocks or sectors will be the best performers in 2024. Because I don't know about you, but I highly doubt the Magnificent Seven stocks are going to return the same exact returns they did from 2023 in 2024. They will most likely be a new outperformer. And this is something that's called sector rotation. And it's something that I really believe into because I participated in it many, many times. Like in 2021, one of the best performing stocks was a lot of the Cathie Wood hype stocks. If you remember in 2021, people loved Cathie Wood and they hated Michael Burry. They called him a boomer, bear. They called Warren Buffett that he's out of fashion or he lost his mind or something crazy about Bitcoin or whatever it was. And what happened in 2022? People hated Cathie Wood, they loved Michael Burry, they loved value stocks, they loved oil stocks, and these stocks, the hype stocks that did so well in 2021, they were down 50, 60, 70, 80% in 2022. And these were the best buys of 2022, 2023. A lot of the hype stocks came back. AI stocks have been performing well in 2023, mainly the Magnificent Seven stocks. So I believe 2024 has to be something different. There has to be a new outperformer. This is what normally tends to happen, and I'm gonna try to find it here in this video. But if you look at the most crowded trade, it's actually long the Magnificent Seven. This is the most crowded trade, over 49% based on a Bank of America Global Fund Manager survey. 49% are long the Magnificent Seven. 22% are short Chinese stocks, China equities, which is very interesting. Now, I don't know about you, but I believe in 2024, there's a very high likelihood of the opposite happening, of some stocks like Alibaba and JD maybe outperforming something like the Magnificent Seven. I'm not long something like Microsoft, and I'm not long Alibaba or JD, but this has a very high likelihood of happening because, as I said, the outperformer tends to become the underperformer tends to become the outperformer. And this is pretty interesting to see in terms of being short Chinese stocks, 22%. This is very, very high. And if you look at the performance in general of 2023, there's over a 63% gap between the Magnificent Seven and the 493 stock. This is pretty much unprecedented. Over a 75% return for the Magnificent Seven and only a 12% return year to date for the 493 stocks. Now, one sector or asset class or industry or whatever you want to call it that I believe has the chance to be one of the best performers in 2024. It hasn't done much over the last 3 years, and it has everything pretty much lined up. All the stars are lined up for this kind of stock to do amazingly well. It's mainly IWM, for those of you that like ETFs, or the Russell 2000 ETF, aka small and micro cap companies. And the reason for that is that normally I believe the algorithms and a lot of investors, they tend to sell IWM whenever we have higher interest rates. As the main reason they do that, they sell IWM and they take refuge, they go for safety into the Magnificent Sevens for two reasons. The first reason is the Magnificent Sevens, they have amazing balance sheets, hundreds of billions of dollars in cash and very little debt. So they have a good balance sheet which protects them and allows them to benefit from higher interest rates. Unlike a lot of the Russell 2000 stocks, they have very bad balance sheets and they don't have cash positions, so they are very exposed to higher interest rates. The second reason is a lot of the Magnificent Seven stocks, they are international. They are not only United States. So maybe let's say the United States is slowing down, but let's assume Europe is growing. Something like Google could benefit. Something like Apple could benefit. But a lot of the IWM stocks are highly dependent on the local economy, which means And for a lot of investors, whenever we have higher interest rates, the economy tends to contract. It causes the algorithm to sell small caps and IWM stock. And whenever interest rates are going down, it normally leads to an expansion in the economy, which would give a lot of investors and the algorithms more confidence to buy the Russell 2000 stocks. We have seen it since Jerome Powell announced he sees 3 rate cuts in 2024. And if Jerome Powell says 3 rate cuts, and I would personally believe it's most likely 6 or 8 rate cuts, because they always overdo whatever they do. If they're hiking, they hike more. If they cut less. And IWM has responded, I mean, pretty magnificently since Jerome Powell said it, even a little bit before then he said it. And I'm personally exposed to small cap stocks, a lot of micro caps. I shared one of them here on YouTube. You could watch a lot of the videos related to the things I'm going to talk about here in this specific video. By IWM or the Russell 2000 has done nothing for 3 years, which I believe gives it a very high likelihood of performing amazingly well in 2024, especially if we do have those rate cuts and maybe more than Jerome Powell talked about. IWM could outperform something like the Nasdaq and the Magnificent Seven, which is what normally happens. Normally small caps go up a little bit more than the Nasdaq. It has not been the case in 2023 because of higher interest rates, but 2024 could be entirely different for small and micro cap stocks. And I'm very, very bullish on this sector. The second sector that I'm bullish on, which a lot of you would assume that it's boring, a lot of you would find it boring, especially if you're more of a growth investor. And this is mainly the gold mining stocks, not just gold mining, but gold stocks in general. I talked about Sandstorm on YouTube. This is a royalty company, but any kind of stocks that are exposed to the gold itself. First of all, gold tend to do well whenever we have lower inflation and whenever we have lower interest rates. A lot of people believe that gold is a hedge against inflation, which was not true. Whenever interest rates were going up, gold was crashing a few months ago, or even in 2022. The main reason for that is because inflation was going up, the Fed was hiking rates, which is bearish for gold, and investors were selling gold. But the opposite is true. Lower inflation and lower interest rates is a good combination for gold, and this is what's most likely will happen in 2024. But you also have a 6% gap between the GDX, which is not the junior, the senior gold mining kind of ETF, between the GDX and gold itself. They used to trade together, and now there's a 6% gap. I think the gap will close, but a 6% gap in terms of GDX could mean something like 15 to a 20% just gap closing itself from many other stocks like Sandstorm or many microcap kind of gold mining stocks or junior gold miners, whatever you want to call them. So I'm very, very bullish on gold going into 2024. I'm exposed to gold. I have many things around gold. I talk about one of them on YouTube. So I'm bullish on gold. I'm bullish on small cap stocks, and I'm also kind of bullish on dividend stocks, because dividend stocks have been also performing very poorly over the last few years because we had higher interest rates. There was no reason for you to take some risk and go into a dividend stock when you could collect 5.5% or 5% in short-term treasuries or money market funds or wherever you want to put them. So there was no reason to take the risk and invest into dividend stocks. But if we do have lower interest rates in 2024, maybe 3%, 3.5% kind of interest rates, a lot of stocks that I talked about before, and even now some stocks are still yielding 6, 7, and 8%, and maybe some of them have lower yields, but they are dividend-oriented stocks. These stocks are going to look extremely attractive if we do have lower interest rates in 2024. This is not something I'm extremely bullish on because a lot of these stocks have started to play out. A lot of them have been rallying recently, but I still believe there's an opportunity over there in a lot of the safety dividend paying stocks which have done nothing over the last few years. Something like Pepsi is still down 6.5% year to date. Verizon is down 6.5%. Coca-Cola is down 7.3%. Johnson & Johnson is down pretty close to 13% year to date. These are very safe dividend-paying stocks that have done nothing, especially in 2023, as it's been a risk-on rally. Investors were speculating on AI and any kind of very high-tech AI cloud kind of stocks. Now, if these stocks, the AI stocks, I would doubt they would perform as well as they did they're going to perform in 2024. I would say that something else will likely outperform. They will take a short break and maybe outperform again in 2025 and 2026. It's not going to be a straight line up. And I think a lot of these dividend stocks could take the place of a lot of the AI stocks if we do have something like a risk-off rally or something that's a little bit more neutral than just a risk-on rally like we had in 2023. I think dividend stocks are not looking too bad in terms of the risk-adjusted return, but my absolute favorite is mainly small caps caps, IWM. I'm very bullish on this kind of sector or industry or whatever you want to call it. It's a perfect storm for these stocks to finally do something after 3 years of being flat. And this was my opinion on what I believe will do the best in 2024. Merry Christmas to you. It was not financial advice. Thank you for watching. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.